Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of gold. After the NFP, we were expecting a huge movement on the chart of gold during the NFP, and more or less we got a move also, and ultimately market closed at 1695. This is the last traded price of gold on Friday trading session. Before I proceed, I would like to take you to the Forex sentiment meter, where we get to know the sentiment of the retail traders, not the positional traders but the retail traders. And here we can see that 49% retail traders have taken short position and 50% have taken long position. It means that 50% are on the sell side, 50% are on the buy side. So there is a confusion among the retail traders also regarding the direction of the market. Okay, so we get a clear picture from the sentiment meter that retail traders are also confused right now. Now let's have a look at the chart of DXY. See, DXY ultimately closed at 112.74. There was a kind of a minor resistance here. So if we look at the chart properly, then DXY failed to cross the resistance. So almost it's closed at a resistance only. So the Monday market opening will be very important for DXY. Okay. But one thing I would like to tell you is that if you look at the chart of DXY carefully, then you can see that undoubtedly DXY is in uptrend and the uptrend is still continuing. Those who are thinking that trend is about to reverse, okay, there was no trend reversal. Keep in mind, we need a big news, big factor that will bring a complete trend reversal on DXY, and right now we don't have that. Okay, so DXY is approaching 114.50, okay, 114.60 level, and this is a resistance zone. Okay, resistance zone for DXY. Usually in an uptrend market like this kind of previous highs do not work, but in this case, okay, there is something special that I would like to show you. Okay, overall DXY is an uptrend, okay, there is no doubt about it. But if you look at the US government bond chart also, we can see a similar story. Undoubtedly uptrend market, there was some temporary correction in between, and it is also approaching the resistance zone here. So DXY is also approaching the resistance zone. US government bond is also approaching the resistance zone, and charts speak a lot of things. If not trend reversal, but yes, there is a possibility that during next week there can be some correction. We may see some correction, we may see some up move on the chart of gold because of pressure on the chart of DXY and government bonds for some time at least. Now let's have a look at the chart of gold. Here is our gold. You can see that I have drawn many lines here, so let's try to understand the levels one by one. Okay, first of all, 4-hour chart. In the 4-hour chart, you can see that overall after this downtrend there has been a temporary recovery on the market, but yes, again we are seeing series of red candles here, and to be honest, right now we do not have any confirmation. Regarding the trend reversal. We still don't know whether we have a reversal or not. We still don't know whether the downtrend will continue or not. We have no proper confirmation yet. So as a result, it's time to trade from level to level. My dear friends, try to trade from level to level only. This is not the right market to go for swing position or positional trades. If you have got sufficient capital, then you can think about taking a big position or a swing position. But if you have a limited capital right now, if you're a beginner right now, so it's time to protect your hard-earned money and trade from level to level only. As I always say, do not gamble with your hard-earned money. Try to understand the nature of the market. The nature of the market does not remain same. The nature changes from time to time. Okay, so let's try to understand what should be our trading strategy for Monday. So as I said, market closed at 1695, or as we all know, 1695 market closed at 1695. So the market, if after the market opening, okay, after the market opening, okay, try to observe the volatility of the market. Okay, as we all know that usually the Monday markets are silent. Okay, they are not very volatile, but sometimes we get to see crazy volatility also. But majority, okay, but in the majority we do not see much volatility. Monday markets are silent. Okay, if the Monday market is silent, if you see the Monday market is acting like a normal Monday market, okay, then you can expect the market to reverse or expect the market to bounce from 1690. So 1690 is your first support. Why we're considering 1690 as your first support? Because of price rejection from below. You can see during the news, during NFP, when NFP news came out, okay, and market was going down, 1691 was the level from where market bounced. So we can expect on Monday also that if there is not much volatility, Monday market is kind of flat, then market may bounce from 1691 level. So this is our first support. Okay, but keep in mind, first support is not strong. It will only, it should work only when the market is low volatile. Okay, the second support is around 1685. 1685, around 1685. It can be 1684.50 also, it can be 1686 also. So around 1685 we have our second support. Okay, why we have our second support around 1685? Let me show you. You can see that around 1685, okay, we have seen strong price rejection previously. Okay, strong price rejection previously, and hopefully the 200 moving average will also be there when the market will hit 1685 level. So we have got previous resistance which will now act as support. So previous resistance which will now act as support, as well as 200 moving average will come up to provide support to the market. So as a result, 1685 can be an important level for the market. But as we all know, no level is permanent in the market. Okay, so as a result, watch the market first. If you see that market is standing at 1685, well, see whether market is taking support or not. If you see the market is showing price rejection from below, if you see the market is showing hammer kind of a pattern on the 1 hour chart at least, or 30 minutes chart, then you can go for a buy position. But yes, price rejection from below or any confirmation is important, like a bullish engulfing pattern or bullish pin bar is extremely important for confirmation, because after all it's market, no level is permanent. Keep in mind, never forget that. Okay, and ultimately we have 1672. So if market breaks 1685 level, there can be a heavy sell in the market, and in that case you can expect the market to take support around 1672 level. Okay, 1672 level, why is it important? Because of Fibonacci 50% retracement, no other important factor. Okay, Fibonacci 50% plays a big role here. So this is Fibonacci 50%, and as well as you can see previous price rejection also. Okay, so if we combine both the factors here, we are expecting 1672 act as support. But again, I'm saying, before placing any buy order, watch the market. Always remember, a trader only trades when the opportunity is right. That is the main difference between a gambler and a trader. Okay, so these are the opportunities if market goes down on Monday. And in case after the market opening, if you see market going up, okay, so let me tell you one thing very clearly. Right now we do not have any strong resistance. Okay, we do not have any immediate strong resistance on the market from where we can expect the market to reverse. Okay, but yes, considering it's a Monday market, okay, yes, there are some small resistances, so where market may face some selling, and if the volatility is less, we can expect the market to reverse. So first of all, 1699 to 1700 level. Okay, so on Monday, if you see the market is forming small candles, there is not much volatility, then yes, 1699 to 1700 level can be the first resistance for the market, because you can see previous resistance, previous support right now will be acting as resistance, as well as this is also the Fibonacci 23.6% retracement level. Okay, so this is our first resistance. If the market is low volatile, if you see that market is struggling around 1699 1700 level, go for a sell position during the Asian and European session only. Try to avoid during the US session. Okay, and then we have 1705 as the second resistance, 1705 as the second resistance, and we have third resistance around 1710 level. 1710, we have derived all these levels from Fibonacci's only. Okay, mainly Fibonacci. The significance of 1710 level is that we also have the 50 moving average. Okay, so if we combine both the factors, then 50 moving average plus Fibonacci, okay, then it gives us a confirmation that yes, some sellers can be present, some good sellers can be present around 1710. So 1699 1700 level is the first resistance, 1705 is the second, and 1710 is the third resistance. But keep in mind, these resistances are not very strong. So in case if you see a big green candle, do not trust these resistances, because these resistances right now do not have the power to stop the market. Okay, you must understand one thing very well, that not all levels are equal, not all levels have the same amount of strength. Okay, so in simple words, okay, a small hedge firm, if you compare a small hedge firm with HSBC Bank, and if they fight against each other, obviously HSBC Bank has much more capital and much more power to drive the market. Okay, so it's like that only. Okay, hopefully you got the idea. Keep in mind, this is my analysis, I can be wrong as well, so please do not gamble with your hard-earned money. Please do your own proper risk management, position size calculation, and then trade only. Okay, bye bye, take care.